Okay, we are getting rolling, guys. Happy Tuesday. Glad to see everybody joining in. I've got a super great couple of investors and educators that I know personally that have done a lot for me personally, that have taught me a lot about real estate investing. But I know they travel a lot, they get out, they speak in front of groups, and it's a topic that you don't hear very often. You don't even hear it very often through self-directed IRA education. But I think it's important for everybody to kind of understand, especially if you're investing in real estate. You want to understand all the different avenues that you can look at to find properties at, pennies and cents on the dollar. And we're going to talk about how to identify real estate investments through probate, how to navigate through probate, what probate looks like, maybe some terms that you need to know that's important when you're looking at investing in probate. And we've got an expert in it, my friend Al Nicoletti, who is a probate attorney. He's based out of Florida, but as you guys know, a lot of the probate law, a lot of the probate terms and things are pretty universal. So he's going to talk about how to navigate through probate as a real estate investor and how you can negotiate and find deals and structure deals and identify opportunity through probate and potentially use your self-directed IRA as the investor in those types of deals. I've also got a familiar face. If you guys have watched our program before, you've probably seen Ed Peugh. He's a good friend of mine. He's a real estate investor out of Charlotte, North Carolina. One of the founders of CLT Buyers. They were actually out at our self-directed IRA summit just this past weekend. Hope a lot of you guys were there as well. But he's going to just come in with his own experience as how they've actually navigated and found some deals through probate on their own. So not only do we have a probate attorney that's going to talk about the fundamentals of probate and what you should understand, but we have to actually have a real estate investor that has actually bought investments through probate. And again, all of this can relate back to self-directed IRA. So I'm going to do this. I'm going to just start real quick and let me do this and exit my screen here. Give me one sec. Tell me if you guys can see. Hopefully you guys can see my screen here. And I'm going to do this. And I'm just going to go over a couple different slides real quick for anybody who's new. Just give me a 1. If you guys in the chat box, give me a 1 if you're brand new to the program, and give me a 2 if this is if you've been on this program before, our workshop. On the chat as well, guys, if you have questions, go ahead and use the chat or the question and answer boxes there. We'll try to get to all the questions as we go through it. We will have some time at the very end to take some of your questions as well. So feel free to network in the chat. Feel free to ask questions, and I'll try to direct those questions as needed. But let's just jump right into it and talk about who directed IRA is, and if you're new to the program, what these workshops are intended to do. Okay. Directed IRA is a self-directed IRA company. We're based out of Phoenix, Arizona. We're the only licensed trust company in the state of Arizona that handles self-directed IRA investments. I'll talk a little bit about what a self-directed IRA is and what those investments are. But basically, we don't have investments to sell you when you have an account, like a retirement account with directed IRA. When you have a self-directed retirement plan with a company like us, you have more investment options because you get to pick the investments. You get to invest in things outside of Wall Street. You can invest in things like real estate, rental property, multifamily, commercial property, right? Land, investing in other things outside of even real estate. But the key to us as a self-directed IRA custodian is we want to make sure our clients have at least access to the best education on how they can properly use their self-directed IRAs, and potentially know where they can find some investments or go find some access to deals without us selling those investments to you. So on today's program, we're going to just do a real quick review on self-directed IRAs. I'm going to tell you the 7 types of plans you can self-direct, and then we're going to bring on Al, and Al's going to take it away and talk about his experience with probate as a probate attorney. Then we'll bring on Ed, and then we'll close it up with some Q&A at the end there. So as a disclaimer, just as a reminder, All of our programs are for education purposes only. Our workshops, our webinars, our podcasts are only for education. We're not giving you tax, legal, or investment advice. All parties are strongly encouraged to consult with their attorneys, accountants, and financial professionals before entering any type of investment. So, a little background about myself. I actually started in real estate back in 2004. I've been a licensed loan officer. I actually am still a licensed loan officer, even though I don't do that by my day job. But about 11 years ago, I got into working with self-directed IRAs, and I found that there was this huge hole or huge gap between people that have retirement accounts and people understanding what they can invest in. And specifically, that you can invest your retirement into things like real estate. I wish I learned about this stuff 10 years before I actually knew it. So I became very passionate about teaching this to real estate investors, real estate brokers, just people that are looking to invest in alternative assets and not be stuck to things in Wall Street. And I've been doing that for the last 11 years. So there's not an investment strategy on earth that I haven't seen dozens, if not hundreds of times through self-directed IRAs. And I love talking about this, and I love networking with clients to kind of share more about my experience through self-direction. So just real quick, by law, what can your self-directed or what can your IRA or 401k own? A lot of people just think, well, I'm only shown stocks, bonds, and mutual funds. Isn't that my only option when it comes to self-direction or when it comes to just investing with a retirement account? And the answer is no. You can invest in anything except life insurance contracts and collectibles. Your retirement account is not limited to what it can invest in besides those two investments, life insurance contracts and collectibles. The only problem is when you want to invest your retirement into things like real estate, whether it's commercial property, multifamily, private equity, syndication, private stock, your Fidelities and your Charles Schwabs will tell you, no, you can't invest in that. It's not that you can't invest in it in an IRA, you can't invest in it through Fidelity because Fidelity is a licensed securities broker and they limit you as to the investments that they sell and the investments that they make commissions on and the investments that they make broker fees on. Doesn't make them bad guys, just understand the nature of their business, right? They're only going to allow you to invest in stocks, bonds, mutual funds, or we call those traditional investments. If you want to invest in things outside of that, you just have to have an IRA with a company that's willing to manage or hold those investments inside your IRA so that you don't have to take a distribution out of your IRA to go buy real estate or a distribution out of your IRA to go invest in a syndication. You can invest in those vehicles or you can invest in those investments, but you have to still use a custodian that manages the buying and the selling of those investments so that you get all your tax benefits if you decide to invest in alternatives. Now, I will tell you, most of our clients, they have IRAs at Fidelity and they have IRAs at Directed IRA. There's no limit as to how many IRAs you're allowed to have. Most of our savvy investors have IRAs at both places because that gives them true diversification. You can hold some stocks and some paper assets with your Fidelity or Charles Schwab, and then you can hold some tangible assets or some assets with multiple income streams like real estate in your directed IRA. You can just move money back and forth via transfer, depending on where you want your money invested at that time. So don't get confused with the term self-directed. When I say self-directed, it's just a marketing term. A Roth IRA at Directed is no different than a Roth IRA at Fidelity, other than the fact that we just hold different types of investments. So what types of IRAs are you allowed to self-direct? Now, this goes into what we're going to talk about here, which is just finding real estate investments through probate, but just real estate in general can be owned in 7 different types of accounts, provided that it's self-directed and it's with a company like us at Directed IRA. You have personal plans that can be self-directed. These can own real estate, traditional IRAs and Roth IRAs. We do a lot of education about how you can kind of identify whether or not you want to own real estate in a traditional versus a Roth. The main difference is there is just how they're taxed. One, the IRA is taxed on the way in, one, the IRA is taxed on the way out. Depending on your investment strategy, you may want to decide whether or not you want to have a self-directed Roth or have a self-directed traditional. And we do a lot of education about Roth conversions if you're interested in moving money from a traditional to a Roth. before you invest in real estate. I'm not going to get, I can talk for days on that. That's not this program. If you're self-employed, you can self-direct your own SEP IRA, or you can have a simple IRA for you and your employees, or what most of our self-employed small business owners or people that have, small companies with no common law employees, they have a solo 401k, and that solo 401k has a lot of different bells and whistles to it that you don't get with IRAs. But the solo 401k, if you're self-employed and you're investing in real estate, is probably one of the best vehicles for wealth building, for leverage, for maximum contributions and tax savings. So if you're interested in learning more about how you can self-direct a solo 401k and get some maximum tax benefits as a self-employed individual, make sure you contact us or schedule a call with me to talk about how the solo 401k works. And then grow increasingly popular, because I've talked about it a lot, but you can also self-direct health savings accounts and education savings accounts. These are not retirement accounts, but these are also tax exempt accounts that you can self-direct. The benefit on these accounts, though, is different than your Roth and your traditional and your solo 401k, where you have to wait until retirement to take those tax-free distributions in most cases. HSAs and ESAs, you can self-direct those into real estate or other alternative investments, but you don't have to wait to use the profit completely tax-free. HSAs and ESAs allow you to take distributions of the profits through the investments and pay for qualified health expenses for you, spouse, and your dependents. Or if you're doing it with an ESA, ESAs allow you to take distributions right away of the profit and pay for qualified education expenses with tax-free dollars gained on your investment. So when you're looking at this airplane view, what I always tell people is you want to make sure you have every account that you can qualify for, or that you have a need for, because not only can you pay for your retirement with tax-free dollars, but you can pay for current expenses and current needs with tax-free dollars too, by just understanding how to use those accounts. So as we get into probate, just remember, guys, Al's going to tell you how you can identify probate deals. You can buy it personally, but if you want to save in taxes, you can also buy investments through probate through these types of accounts. So I'm just setting that up for Al. And Al, I just want you to jump on now if you can. Al Nicoletti there he is. There's that handsome devil. Just go ahead and unmute yourself, Al.
Cool.
Um,
What's going on, Nate?
Nothing much. So let me just tell a quick story about how me and Al met. So I was working with a company and I was out in Jacksonville, Florida. I still remember this day. And I'm sitting in the back of the room and Al's just murdering it. He's on a panel up there and he's talking about probate. And I have gone to hundreds of RIAs and I've never actually listened to somebody talk about probate, and talk about it in such a fun manner and have so many stories that I was just blown away. And then I got the opportunity to sit right next to him on one of the panels, and we just started firing back and forth. I was talking about IRAs, he was talking about probate, and we just had, I don't know, we are just two kindred spirits, and we've kept in touch ever since that time. And I follow all his stuff. If you guys are on Instagram or Facebook, go follow his stuff. I mean, he's always providing tons of content out there. He's got a huge following. But Al, thank you for spending a little time with us today. Tell the audience about who you are and your background, and I'll kind of let you take it away.
Wow, you really took me back there for a minute. I feel like that was years ago. I remember it was June 2021, and
Yeah.
that was a great RIA meeting. Everybody was coming back from the pandemic. And Nate, thank you for giving everybody the whole refresher on how do you use your 401k or your Roth and able to get into some of these self-directed IRA adventures, because I remember you talked about this at the New View conference, and I was blown away that you could do so many of these things, and I had you on my show and talked about it. So it's really cool seeing all that and getting refreshed on what you can do with it. You forget about those kinds of things because you let your account sit. So thanks for that. Yeah, for those that don't know, my name is Al Nicoletti. I'm an attorney only in Florida. I do things with probates only in Florida, but I have a huge social media presence. I'm all over YouTube, Instagram. I'll share my socials. I'll share my screen in a second. But what I do, I have a specialty where I help a lot of people, investors, realtors, title companies, when they get these messy deals that all of a sudden needs a probate situation, or these investors like Ed, you'll see Ed, like they'll do cold calling, direct mail, inbound marketing, outbound marketing, and all of a sudden they find out, wait a second, this needs probate. And a lot of people for years used to hear probate and thought, whoa, I don't want to touch this. I don't want to get into this. This is going to be messy. It's going to take too long. I jump into the game. It's like it was a novel concept or something of what I was able to explain, but I was able to really break this down in such a way that people really understood it. I've done presentations for Nate before on this, and I wanted to give you a different one that really broke down the opportunity that there is there, right? I could give you, and I'll go through some terms and stuff as I go through the slides because we'll have some time, but I wanted to give you like a really big picture overview, 10,000 foot overview of what the opportunity with probate is. So I'll share my screen. I'll put it right here. Let me see, play from there we go. You got it, right? All good? You see it, Nate?
Yes, we see it. Yep.
Okay.
Perfect.
So you got my contact info down there. You got my email address. You got my phone number. And what you want to do, especially if you're considering getting into the Florida market or you are in the Florida market, you definitely want to scan my QR code. And then, of course, whether you are in the Florida market or not, definitely add me on socials, follow me on Instagram, follow me on YouTube. Not only do I do little clips and videos with probates, quiet titles, partitions, but I also do little interviews with people that are around the country doing big deals in real estate. And also I have a live show, the Al Nicoletti Show. It goes live every Wednesday, 9 p.m. Eastern. And we bring on everybody from the land industry, marketing, mindset, commercial property, multifamily, single family, everybody doing deals all over the country. You don't want to miss it. Lots of content like that. And I know Ed, I got to get Ed on the show too. I'm redesigning the whole studio eventually. So I'm going to have a whole new lineup, but I want people that bring the most value because they've been doing deals and really and helping others change everything. So subscribe to the YouTube channel. You got it right there. But really wanted to make a really concise presentation for you all. And it's hidden gems, finding investment opportunities through probate, right? Where are the gems? And we're going to do the what, the who, the why, the where, the how, and where you can find this stuff and what's going on and why this is such a huge opportunity in probate. So I'll drop to this one. I'll say, the first thing that you really have to know is, what is this opportunity with probate? Like, what is this? Like, why is Nate having me come on here and talk about it? And what did he see before that really caught his eye? And what happened when we all met each other at the RIA? Like, what is the opportunity? The real opportunity that a lot of people don't realize is that there are just thousands of properties that sit titled in the name of a deceased person. And there are heirs somewhere, maybe living in the house, maybe it's land and they're in another state, they're living somewhere else, they've moved on with their lives, that they don't even know about the property. They know about the property and they've been paying the taxes for 20 years. They know about the property and they've been going back and forth on wanting to sell it. Or they have no idea about this existing. You have no idea how many people I know, how many sellers I've been on the phone with that say that, oh yeah, I've been paying the taxes for 10 years, 20 years, and now I finally want to sell. Or we're blown away when they have someone call them and say, hey, did you know mom and dad own this little lot in Lehigh Acres? And they have no idea. They're living in Oregon. They're living in New York. They have zero idea. And it's incredible to me, because what that really shows is that there's such a huge market opportunity where these properties exist like land. land is one of the hot topics right now, and I'll get into some of the case studies, but land is huge. So much development going on the West Coast, on the East Coast, in Jacksonville in the North, and it's just such an untapped niche. So when I talk about probate here, I don't mean like just the probates that are already filed in court. Like those are, you can go through court files and see what got filed, properties going through probate. Like, sure, that's definitely an opportunity to go after. There's ones that are open. I'm sure Ed would talk about that. But there's also the ones that are the less competition, the ones that you don't hear about. And that's the untapped niche, the properties that are just sitting there, titled, and the amount is massive. I mean, the picture on the left is a good example of what some of these could look like, and they just sit there. You can just see them, and they need a rehab or a whole tear. That's a tear down right there. But this is a huge market, and I'm seeing this all in Florida. So the next thing you want to know is, okay, we've been through so many different periods when it comes to real estate. We've been through 08. A lot of people went through things back in the 90s. We went through a lot with the pandemic, and there was a home buying frenzy. And people always ask, if I get into this niche, when is the right time? Is there a right time? Or if I do this now, is this something that's going to have continuity and longevity? Is this going to be something I can eventually get into? And what you'll find is it's incredible that this niche really was starting to hit its peak probably in 2005, 2010, was really starting to go off. And you're probably asking, like, why? And why is because there were a lot of baby boomers back in the day, in the 70s, 80s, and 90s, that invested in real estate deals. There were tons of developers back in the day buying huge tracts of land and subdividing the lots and selling the lots off through TV auctions, phone calls, and just selling lots, and people just buying them up. And over the year, back then, they didn't have a Nate Hare or a directed IRA talking about like how you can leverage your traditional Roth, your or traditional IRA, your Roth IRA. There was nobody really getting into that. I don't even know if that was around. And so they were really focused on real estate. Nowadays, they focus on the other. But you have all that whole generation that went from the 80s and 90s now as the baby boomers, and a lot of people are in their 60s, 70s, and 80s. And a lot of those people that own the real estate, they die. And in order to get it out of their names, there needs to be probate done to purchase the property from the heirs. So the when is really now and years to come. If you see, you have Florida's in the top 4. And I tell people that these stats are pre-pandemic stats. These are not current stats right now. And this is crazy too, because imagine how many people moved here during the pandemic that were in New York, in California, in Texas, that are baby boomers. So those numbers are even higher. And people that were in California that moved to Arizona. I mean, these numbers are going to be higher, the amount of development that's going on. And so you see in the top 4, you got Tampa, that Tampa area, Arizona, Miami, Orlando area, huge numbers that all of a sudden double in about 10, 15 years, right? We're not far from 2027, and we're eventually going to hit 2037, and it's still going to be high. I've even seen stats where it's like 2040, 2050 is like the peak, So if you're wondering, like, is this something that I could use to invest in real estate, right? Are you using your self-directed IRA to get into some of these real estate deals? This is something that's going to last. These things are not going away. Probate deals keep coming up like crazy. Just when I think in my firm, just when I think that around Labor Day, it got really quiet, I'm like, what's going on? are the probates done or something? All of a sudden, another wave comes right in, and there's way more probates that are popping up left and right. So the opportunities keep on coming, is what I'm stressing, is that it's really now and in the future. And that's what you have to focus on. Now, the other side of this is, where do you find these opportunities? Where is it? Of course, one of the first things you want to do before investing is, where's the market that you really want to get into? Do your research, find that market. Is it a market that's super saturated where everybody's going into, and maybe you want to get into that. Maybe Ed would want to get there because that's where everybody's going. Or do you find the markets that are not as hot, but have that potential 5-10 years, and maybe more people are coming in, but it's not as saturated, but the potential's there? Or maybe you've looked at the city's planning. Some cities, what they'll do is they'll map out the future of what they plan to do with the land, with the community, what's going on. And maybe there's opportunities where you say, well, if this gets done, this is where I'd want to buy, and because this is going to be the new hot area. So you always have to identify that market that you want to be in. And also, when you get into probate, what you have to know is that probate deals are distressed leads. They are mainly distressed. There's something going on that would pop up as a probate because they're distressed, right? You have indicators, and I'll show you, but maybe there's a lis pendens because it's in foreclosure. Somebody had a mortgage, they died, they're not paying. What's the bank going to do? They're going to keep coming with the foreclosure. It's not like they're going to stop. Somebody didn't have a mortgage, the house is free and clear, but nobody's paying the taxes. So eventually the county starts notifying the homeowners and everybody that this property is up for a tax deed auction or tax delinquency. Or another one are code violations. So I put that there so you see it. You have so many different opportunities that you can get into, especially if you're investing, whether you're the end buyer or you're going direct to seller. There's different strategies. I'm not an investor. Ed would talk about that, but there's different strategies that if you want to go direct to seller and you want to find these leads, you find them, there's opportunities. Or you're connecting with different kinds of investors that are assigning the contract or wholesaling it out, that are finding the leads themselves. But you're buying it for the flip, for the rehab, to do pad split. That's like the new thing right now. Everybody's like talking about. It's crazy. I got somebody coming on my show to talk about that. It's nuts. But let's start with this. So what you got to know is, like, where are some of these opportunities? Miami-Dade's always going to have stuff, but it's really a saturated market. There's stuff always happening there. But if you want to know some of the gems, you got Lee County's been a hot spot. Charlotte County's been really good. Highlands County is where a lot of those TV auctions and things and developments got subdivided back in the 80s and 90s. Sarasota's been good. This area has been good. And you have the Polk's been hot. And why has Polk County been hot? Polk County's been hot because people that are living in Tampa and Orlando want to get out of both places. So they're meeting in the middle. And so those are opportunities. Buy land, find opportunities, maybe develop or buy a property there. That could be another opportunity for you. But these are hot areas right now that a lot of people are going after. Brevard is another one with a lot of land in Volusia, a lot of land in Marion, little lots here and there that come up. This area is relatively quiet right now, which is kind of interesting. I don't really hear a whole lot happening in this area east of Tallahassee, but eventually Clay County's hot, and of course Duval is. But then you have these counties in the Panhandle too that you want to pay attention to. A lot's happening over in Walton, Santa Rosa, Okaloosa. So really, when it comes to where, I've just seen so many different probates. I've done over 600 probates in now almost 7 years of practice. So I've seen different areas pop. I've seen different areas get really quiet. I've seen random probates in a random county. But these counties that I pointed out are really have been really hot areas to get in as far as investing, whether single family land, you name it. But these are some of the best indicators of probate. Like you're thinking, okay, so again, let's go back to what I said before. A lot of people hear probate leads and people think, oh yeah, the ones that are filed in the courthouse. Sure, that those are low hanging fruit right there. Like that is easy stuff to get. It's filed, it's public record, done. It says probate, that's a probate. But these that I point out are the off-market opportunities, the ones that have indicators. Like if it's tax delinquent, something's weird, and there's probably a probate because somebody's not paying the taxes, they died. Tax deed sale, why is it going up for an auction? Because somebody probably owned that property, didn't pay the taxes, they died. Same thing with foreclosures. They had a mortgage, they died. Same thing with code violation. The grass is like super tall and nobody's taking care of it. So you have these different indicators that come up, and vacant homes. Huge article. You can look it up. I think it was like March 2022 that talked about how Florida had like 1.6 million vacant properties. Now that could be rentals, that could be land, that could be a whole bunch of things, but that's a high number for a magazine to quote on the number of possibilities of vacant homes and how many of those are potential probate opportunities. There's so many different ways you can find it. And I tell people this too. It's like, why is this and a huge opportunity to find real estate deals through probate? Like, why though? Like, why would I get into this? So a lot of people hear probate and they've had experiences before. They've had experiences that the probate takes 9 to 12 months. The probate takes 2 years, right? And if you hear those numbers, you're like, why am I even getting into that? I don't want to get into that. And when I jumped into the probate game as a lawyer, I was seeing that too. I hear stories still to this day. I'm sure Ed's got stories on probate lawyers that just take and sit down and do nothing on a file and nothing gets done. And it's frustrating. But when I jumped into the game, I found an opportunity on why this is. And that's how I had a role with the number of probates that I've done. And really, the first thing is that it's the speed that this can be done. I'll show you my timings, and that's the next slide, but the speed is mind-blowing. The fact that these can be done in a matter of weeks, not 9 months, 12 months, like weeks, like 3 to 6 weeks, 4 to 8 weeks. It's crazy. Like that's the probate being filed in court to the court order. Sometimes even sooner than that. We filed a couple probates like in the last 3 days that was filed on a Thursday. We just got court orders today. Like it's crazy the timing behind these things and the efficiency. One thing that we strive for in the firm is making sure that we are qualifying the heirs and making sure that they get us everything, right? The purchase contract, the death certificate, the will, if there is any, and really being efficient with what we got to do to get it done. We're not piecemealing and finding out all these things later. We got to be very efficient. And the fee structure, one thing I've been able to do for these Florida probates is waiting until the closing for payment, which helps everybody because a lot of times lawyers are asking for the money up front. But what we're able to do is structure it in a way that will wait until a closing. And so if you're not in Florida and you're trying to find a lawyer that does this stuff in another state, some of the things I'm talking about are the type of lawyer that you want to find. The ones that are efficient, conduct themselves with speed, structure their fees in a creative manner. That's very key. And these require analysis. And when you're able to work with people that can calculate the puzzle, see, probates are puzzles. It's not just a button you press and then out comes the probate. Like a lot of these require a family tree, and you'll have mom that owned it, 4 kids, maybe one of those kids died after the next one, and we have to do a whole analysis. I'm not saying you all, I'm saying we are in the firm doing an analysis to find out, okay, there's 7 kids, all those 7 are now participating and have to be a part of the deal. And so we're doing that deep analysis, and once in a while you'll get a deal. I'm sure Ed's got stories that you'll find this one deal that you can't find one heir, and it's very hard. We had one deal where this investor, I distinctly remember where I was. I was coming out of the Jacksonville airport, and this one investor had this deal. Hey, Al, we got this deal. It's like $100,000 spread in it. I'm like, yes, I'm listening. And they said, we know that the guy died. There's a kid somewhere, but they can't find him. Who do we go to next? And I'm like, if you know someone's out there, you got to find them. So they got with a specialist that specifically goes after heirs, finds heirs that may be a part of this person's tree. And it took 6 months, but all of a sudden, out of nowhere, they emailed me and said, Al, you're never going to believe this. We found the heir. And I was like, what? They said, yeah, we got him. It's just one person. I was like, well, where are they? And they found them in the Pacific Ocean, not in a boat, but on an island. They found him in a Pacific island. It was crazy. And I still remember the guy had no idea that he was an heir and mom owned this property in Florida. I mean, again, here we go again. No idea, never knew. And it was done. We got that probate done in like 3 weeks. It was done. So we work with people, or we're able to point you in the right direction on those kinds of things. And that's the why, is that you have these experts at your disposal. That really helps. And again, these are some of the record times that I had in Tampa, Jacksonville, Fort Lauderdale. You can see I'm not giving you 4 to 8 months. I'm not doing 9 to 12 months. I'm talking about probates that once we get everything, we file it from start to finish. You're talking a matter of weeks. That's the kind of thing. And I love Clay County and some of these other counties that are really fast. And we got to talk about how does real estate relate to probate opportunities? Like, what's really going on? I don't think there's anything better than giving you real case studies on successful deals, wild deals that will put a lot into perspective and give you visuals on what the opportunity is. So I have actual case studies, things that I've worked on, wild stories. Nate's seen a completely different presentation with completely different titles to stories. That's a whole other presentation. It'd be so different doing it virtually. It's a completely different thing in person. But I want to give you real case studies on what we've seen. So we had this one deal that came up about 1.5 years ago, and it was the investor said, hey, Al, the property's heading to a tax deed auction in like 3 days. And we were like, what? And they were like, yeah, we got to make sure we know and find all the heirs. So we had one of the heirs reached out. I talked to them, find out that they don't just own the property. There's like 6 other people on the title that are deceased. And I was like, well, that's a big thing to know, because if you have multiple people on title and each person's deceased, you need a separate probate for each person. So it was like, oh my gosh, we got to do 6 probates on this one property. And so what I talk about before, deep analysis, family tree. So I spoke to the heir. I went through each one. And fortunately, the family was not like a big family down. It was a lot more like brothers and sisters, but they only had one kid, then a brother and sister only had one kid. And when I did the full tree, ultimately there were three heirs. Like, it was a crazy tree, but there were three heirs total. The one lady was like 105 years old. Another person, well, normal age, like, 60, 70. But it was crazy because we were against a tax deed auction, trying to solve this, three heirs, and it wasn't the heir situation wasn't crazy. But what was crazy was getting the analysis done. And what the investor did was they paid off the taxes. So the tax deed auction came off the block. So they were all in on this deal. Between the tax auction was 10,000 and the probate fees and cost, 6 probates. You can imagine that's not like a $2,000 adventure. I think it was total, they were all in like 35K, and they bought it from the three of them, and they were able to get an end buyer that bought it for $200,000. And so they were able to snag the deal, grab it, multiple probates. But an example is that on the left is like, it was huge. It was zoned commercial and multifamily. And that property, wild story is that the family didn't believe I was going to get it done. The husband of one of the heirs called me one day and he said, "Hey, like, I don't think you're going to do this." And I was like, "What do you mean?" He goes, "We went to 4 other probate lawyers and couldn't figure it out." Crazy. We've had some other ones with
Hey, Al,
yeah,
I wanted to just ask a question real quick. So while you're on
yeah.
that, because we've got a couple questions about process. So it appears that if you're using those kind of lead indicators that you mentioned, what would be first step for an investor? Is it you see lead indicators, you want to catch it before it goes to probate, so you try to find all the heirs? Is that step one?
Find at least one heir.
Okay.
I'll let Ed even talk about some strategies that they do as well. But one thing I would say on my end, anytime somebody's like, "Hey, Al, I got a potential deal," I say, at least get one heir, because that one heir, whether it's a son, a daughter, a brother, sister, somebody knows the real family line. Somebody always knows what's going on. They'll tell you when I ask questions, I don't know, for some reason I get like the real answers. But they'll tell me, they'll say, "Hey, by the way, there's 7 kids." And it's like, where is everybody? Of course it's gonna be crazy. But
Awesome.
yeah,
Thanks.
yeah. You want to hit them before, and you want to get in touch with at least one person. But you're going to need everybody. That's the whole thing too. Here was another one. This was a crazy deal. This just got done a couple months ago. But the investors, through their CRMs, they did a lot of cold calling, and they were able to pick up this one deal in East Florida. And ultimately, it was one probate, and it was just one heir. It's the brother. It's easy, no problem. She had a lot of debt that had to be addressed. That was a whole thing, but it was super straightforward, to the point. And that was done. It didn't take that long, and huge opportunities where they were able to purchase it, get an end buyer to buy it for really good money. You could see the spreads right there. And you have these properties that need a lot of repair, but if you go direct to seller and then you're the one doing the rehab, I mean, and then you're keeping it, holding it, doing Airbnb rental, pad split, you name it, there's huge opportunities. But these are ones that, but for reaching out and doing some kind of mailing, doing some kind of cold calling, or doing some kind of marketing in some way, they would have been in this distressed situation, probably lost it to an auction or something like that. Here was another wild one. It was one of the first. I was always wondering when I was going to pick up like an orange grove. I didn't know when I was like, you would think that an orange grove would be probably titled in a trust or an LLC or incorporated, but this one property had multiple title issues. Title report came back. Title company said it needed 3 probates. And this somehow land seems to be direct mail and land seem to go hand in hand. There's something with being able to market it that way that seems to work for a lot of people. But direct mail, and they were able to get a hold of the family. And it was a wild situation because the title company had initially said to the investor to go to the quiet title route. And so that was the initial conversation was let's do quiet title. Let's do quiet title. Anybody that knows me, quiet title does have its function for things to get done and solving title. But my ultimate preference was get probate done. This is going to be the best route so that you guys can all get in on the deal. So great location. Again, when I was pointing out the map, man, great location, locked up the contract, 3 probates. They weren't difficult. I think for one of them is 1 heir. The second one had 3 heirs. And the third one was just needing to be reopened because it was done in the 90s, but it wasn't done right. So we get into these things where we just got to fix it up. People think that it's going to be complicated and wild and crazy, but these are great deals. These are opportunities that you can get into if you just know how.
Al, quick question, because we had this asked a little bit earlier. I think Ed typed an answer, but in your experience, is there any difference between, say, working through acquiring land through probate versus like a real estate property? Do you see any difference there? Or do people have more attachments to one versus the other? But you kind of shown a lot of land. I'm just wondering if land is an easier pickup through probate than property or real estate, if you know what I mean.
Well, at least on my end, I'm sure Ed's got his experience, but like you're not going to have inspections with land. I mean, you're going to have like environmental inspections and stuff like that, but you're not going to have like actual physical inspections with property. And land just seems to be an opportunity right now with investors. I don't remember your first question, Nate, but this is what was the first one?
It would just is there much of a difference you see as far as like on the investor end getting land versus a 3 bedroom, 2 bath house?
Less attachment for land. You're
Right.
going to have way less attachment for land. There's more
That's cool.
attachment to the house, and sometimes there's no attachment to the house, but there's always like one heir that has some kind of attachment. They are living in it. They don't want to get out of it. I'm sure Ed's got stories for days. But
Al, normally it's the guy who's not paying rent living in the house that has
right,
no interest in selling, right?
right, that's it. And then they're a squatter at that point. Um, but you got these other deals like another. We found a Lehigh Acres deal. This investor had 3 probates. I think everybody can see the theme, and the theme is that you have all these different opportunities with land. Another one that we had, there was 7 acres. I think it was zoned either commercial or multifamily. Again, huge lot right there that people can get into. And title insurance needed it done. But look, again, I put this on the bottom. Timing's not bad. The spreads are huge. The properties are huge. Great location, and just takes a little bit of marketing to get into. Again, not all that difficult. We had another probate in the Panhandle. Like I pointed that out before, another deal in the Panhandle. It was another cold call. It was West Florida, little house like this, just needed 2 probates. And a lot of people were passing on it because they just heard probate. And there was just 2 heirs. It got done in 8 weeks. It was massive. Miami, another deal, same thing. Half an acre, title insurance came back and said it needed probate. No problem. Everybody knew that we had to get everybody on the contract. Everybody had to sign. And so you have these deals that keep popping up. Like this is another rehab. I mean, there's Ed would probably tell you there's probably some stuff you could do there to spice that thing up. Maybe make it look white, take the bars off the front. And other deals like this lot right there. This was probably the craziest, definitely of last year for me, and it got done. We had this one deal in the lead source. It was going up for foreclosure auction. So I just spoke at one of the summits last year, got off stage. Investor said, hey, I got the same situation that you just talked about. It's going up for auction, but it needs 2 probates. And I'm like, all right, what's going on? So I do the whole analysis. We find out there's a total of 4 heirs, 2 probates, and they were able to get all the heirs under contract. I was able to also jump in to try to cancel the foreclosure auction and extend it again, because you can't just cancel an auction, like it gets extended again. But what ended up happening is that the heirs kept ghosting everybody. They kept all of a sudden disappearing, and all of a sudden it took me to say, hello, like it's up for auction again. And all of a sudden they like came out of nowhere, like freaking out. And so we had to do it again. I had to do it 3 times. Eventually the judge said enough. And the probate got done in 7 weeks, but it took 9 months to get their attention, and the deal got done. And so huge opportunity. I mean, it was a dilapidated property they were able to buy in Central Florida. But as you can see, this is the kind of stuff that a lot of people don't realize that you can use and get into in real estate, because there's opportunities. It's not going away. Huge spreads, small timing, big opportunity. And that's why I love getting into probate. It's why I know Nate's dying to get into probate. He's probably finding one right now. But don't forget, if you didn't get to add me on socials, follow me on Instagram, find me on Facebook, YouTube. You got all that stuff right there. And I hope that was informative for people.
No, it was, and I've got some questions written down that we'll tackle here in a sec. But first, before we do that, I wanted to let Ed speak a little bit to your experience, Ed, from the real estate investor standpoint. I know you're in North Carolina, but I want you to kind of give the audience kind of, how do you negotiate these deals? I know you've run into some error issues, and you might want to just unmute yourself. You've run into some issues, like you mentioned, the renter that's a squatter, the relative. So give us some of your experience dealing with probate on your end.
Yeah. First, I think I just want to say to people, Al is telling you about things that are happening in the market every day. These are not exceptions. They're not just in his market. These are happening throughout the nation. There are families who need our help. There are families who do not know how to find the resources that we know how to find, how to locate. So for example, Al mentioned that part of the process may be creating a family tree. We have a very specific person who's a consultant for us, that if we need to create a substantial family tree, she'll come in and help us do that work. And even things as simple as that, we think, those of us in this community think it's super simple, or it should be very intuitive. These are very overwhelming things for some people, and our ability to provide those solutions to families can create massive value for us. I'm not surprised at all to see the numbers that Al is talking about when he says someone buys a property for, say, $35,000, and then they sell that property for north of $180,000 or $200,000. That's exactly in line with what we would say the market is and what happens. Many of these families have been paying taxes on these properties for years. We helped a family. We had 3 siblings who wanted to sell a property, and they couldn't sell the property for almost 15 years because there was another heir who was their aunt, who they had no relationship with, they had no connection with, they had no way to find her. And so for 14, 15 years, they were paying these taxes on a property that they just wanted to get rid of. They just wanted to stop having the burden of even paying the taxes. So they practically gave the property to us. We found this 4th heir. She immediately signed documents, and then we were able to sell the property for very fast. It wasn't that specific deal wasn't some huge deal for us, but a very quick deal and a great way to just generate a great amount of money. And imagine, you had done this in your retirement account where you gave the deposits out of your retirement account, or you gave the initial funds out of your retirement account, and then you're generating, say, 10 or 12 or even $35,000 back, all tax-free or tax deferred, depending on the type of account you have. That's really powerful. And you can do that with just an initial funding in the first year of your account.
Yeah, that's a really good point. And probate's no different, in some regards when it comes to self-directed IRAs than doing any other type of investment. For anybody that's interested in using their self-directed IRA, the first step is, I mean, really easy. Make sure you set up an account, make sure you move some money over so that your self-directed IRA custodian can deploy any deposits or pay any fees that need to get paid. I know Al mentioned, the investor kind of kick the can down the street by just coming in and paying the property taxes, I believe, right? That might be something if you want your self-directed IRA to be the investor on this deal, don't try to rush and try to set up the account and try to fund it after you find the deal. This is very important to set it up beforehand. Or, as a lot of our clients know, we set up those, the checkbook IRA LLCs that at least get the money in a bank account that you can deploy on your own. But make sure that you contact us if you don't have this set up prior to.
And to mention, sorry, Nate, real quick, and to mention, most of the deals we get in the probate world are a great value because of the time constraints. And so if you're not in a position to act quickly, you're setting yourself a little behind the 8 ball.
Yeah. Let me ask you guys both a question. I'd love to get your response on both of this. When I'm thinking probate, I'm thinking there's probably a lot of emotion involved in these conversations. It's a lot different than maybe negotiating your typical property you find on MLS. Is there a different kind of conversation that you're going into, or a different kind of strategy that you're going into this, knowing that there's probably some attachment to some of these properties, yada yada?
I'll jump in first, and then you add. We find one of two things: either they're highly emotionally attached to it, or they don't care at all, right? And often it's even split in families. Like if Al and I are the two heirs, he may care very strongly about the house, and I've moved on with my life and I live in another state, and my children and I don't have any relationships. So it's just one extreme or the other. There's no real middle ground there.
I would assume the guy that you found in the Pacific Ocean had little to no attachment to the property.
Yeah, basically, like he was ready to offload that thing. That was a crazy story. Yeah, I'd say along what Ed said, I would say it's more in the middle, like not too attached to they really don't care. I've just seen that. What it really boils down to is all of a sudden somebody's reaching out to them about a piece of property that they may be inheriting, and what they hear are the dollar signs and the money. And so while the beginning conversation could be emotional, it really, at the end of the day, at the closing table, when the deal's getting done, none of the emotional stuff comes up, because at the end of the day, they're owners and they want the money. So like especially land and some of these homes that just sit vacant, there's like little to no attachment.
Al, at what point does somebody get a probate attorney involved?
They get a probate lawyer involved when the title company says probate's needed, or maybe the family says, hey, we've never gone through this before, but mom or dad or brother, sister owned it. I have one right now where there's 11 people on title and 3 are deceased. So right away they were able to say, hey, by the way, like we have our other siblings on the title, but 3 are deceased. And so boom, without even title knowing or anything, you're just picking up like little keywords. And sometimes you pick up things like they'll say, mom owned the property. It's like, well, I'm talking to the son, so where's mom? And then they'll explain everything. So those are like the little indicators.
Yeah, I really loved your chart too, where you kind of showed where kind of the hot markets are in Florida. How does someone go about finding out the hot markets in their state? Is that by contacting a probate attorney? Is that just by their own experience? And if they start, getting into that, then they just kind of learn by trial and error. But how does somebody find if they're in Nebraska or Ohio? What are the hot areas in those states?
I'd probably say that comes to a lot of data too, like where a lot of people purchasing. There's so many different avenues. Ed will, I'm sure, answer that. But like also getting into your tapping into your local investor meetups as well, because there's a lot of investors out there like Ed that will JV with you on deals. And if someone like Ed is going to say no, I'm not getting into that deal, obviously Ed knows more about that market than other people, or he'll say, yeah, that's a great area. Let's partner on that. So you'll be able to get the flavor when people are excited or other investors are like, yeah, no, like that's not hot.
Right. Ed, where have you found your probate deals? How did those come about?
Yeah, so we're a direct to seller marketing firm. So we talk with a lot of sellers. Some of those sellers are targeted because we know that there's probates, there's indicators out there. You can buy this data from data aggregators. PropStream happens to be one if you guys are looking for one, but there's Propelio, there's Batch, has a company called Batch that has a whole infrastructure. They can provide these indicators. But we also find them just in other things, and Al touched on this, but a lot of times you'll be looking at other indicators. So for example, a vacant home or a home that you drive by that looks just physically distressed, it's distressed because the people who used to care for it aren't there any longer. So there's often probate deals kind of come from other deals as well. And just to give one other piece, tactically, what happens in our business, as we go under contract on that home, we often are aware that there may be a probate situation. So the file goes actually to two different attorneys. It goes off to our title attorney and it goes off to our probate attorney in parallel. They're used to working together, and that's how it happens in our world.
Ed, I noticed that you typed something that I'm curious on. Maybe you can expand on it, but you talked about using or creating a credibility package of past deals. I'm sure that helps kind of break down some walls when you say, hey, we're experienced, we know what we're doing, we'd love to buy this property.
It does. And again, one thing that we bring to the table is we say to sellers all the time, look, if this home was in perfect condition, I could probably pay you this. But if you want my help managing a lot of this process, I'll probably be here, but it's a white glove service. You can be completely hands off. You don't have to deal with any of the stress, any of the things. And what we have found is a lot of sellers want to lean on our expertise to get that done. So yeah, it's definitely helpful.
Yeah, and I would say, and Al, I'd love your thoughts on this. I mean, it seems like, with the market as the way it is kind of everywhere, there's shortage of inventory. I mean, if you're a real estate investor, you got to look for new avenues. And probate's one of those ones you never hear about it, but it's out there. I mean, and you showed the numbers, it's out there in waves, and it's probably something that's, you've got your low-hanging fruit, but you've also got the ones that nobody wants to touch. And if I'm a real estate investor, I'm trying to find avenues to get those.
I would give a tip for folks. Here's just a tip throughout the nation. Each state is going to do this differently, but if you look at your foreclosure filings and search for the word heir in the foreclosure filings, a lot of times when the heirs are unknown, the lender just names all known heirs, or they'll have some abbreviation for that. And if there's a way for you to search the filings in your state or county for that, those can all pop up.
Yeah,
With or without data aggregator, you can do that.
That's a super advanced tip from Ed, because he's so on point. When a bank brings a foreclosure, and let's say it's never gone through probate, the bank has to do due diligence to try to find all the heirs to do their proper foreclosure proceedings. So they're going to name, they gotta like appoint somebody in court that's got to find these people. They file a report. So in Florida, it's guardian ad litem. They find all these people, and then they have to amend the complaint, and then they name everybody and try to serve them. So you almost cut a step out of your skip tracing if you can leverage those opportunities to find those people based on the filings. And hey, did you know that this person owned a property and you're named as a potential heir to it?
And
Now,
if you can do a deal with the sellers, and this is why probate work is so important, if you can do a deal with the sellers before it goes to public auction, you're going to get a better price.
Al, from the attorney standpoint, what do you see as the biggest mistake an investor makes getting into probate? Is there like a common mistake, or there are top three mistakes? What should people avoid, or try to at least prepare themselves so they don't run into a common mistake?
Big one is, like, again, these are distress leads, which means they're heading to some kind of auction. It's keeping your finger on the pulse and monitoring hey, is this going up for auction in 3 weeks, or is it going up for tax deed? And like, what do I need to do to prepare for that? And a lot of times investors will do so many deals, or teams will have so many deals all at once, and that they're not keeping their finger on the pulse, and then they could lose a deal like in no time. And so it's just being aware that it's not always just the probate, but it's all these other things that can come up that can be detrimental to the timing, detrimental to the deal itself.
Yeah. Ed, you got anything you want to add to that? Any mistakes that you guys have made or seen people make?
Well, yeah, we've made plenty of mistakes, but pricing in the risk, we're in a situation where you may, for example, you may need to put money to stop the tax foreclosure before you have found that third or fourth or fifth heir, and just making sure that you're pricing in that risk and what you're paying the family is, and there's a whole strategy around that. We may not have time to really dig deeply into that, but just making sure that our contributions into the deal don't overexpose us is really effectively the point. Nate, I did note that we have a couple Q&As that we wanted to answer live, and just want to make sure we get to those.
Yeah, no, we'll get those. I'll get those. Those are kind of some easy ones. I just wanted to hit one more question too, because this is burning my brain. You've got a probate situation. You've got 5 heirs. 4 are willing to sell. 1 isn't.
Yeah.
What do you do?
I'll let the attorney answer that question, and then I'll talk about how we manage it from a negotiation point of view.
There's different avenues. One is that one heir missing, or are they just like holding out? So if they're missing, that's where, again, before you do anything, you got to get your experts involved to do a deep analysis to go find that one. If you find them, great. If you don't, move to the next step. And really, you have 2 avenues, and this is where we get creative as in the real estate space as lawyers. The first route is, if you have 4 and one's holding out, the first thing that would happen is, do you buy out the 4 and then you handle a partition lawsuit to force the sale of the property against the 1? That's an opportunity as well. Partition's a whole other animal with a different color that we couldn't even get into, but it's a mechanism. I'm sure they have it in Texas and North Carolina. But the other, Nate, you'd be really surprised. There's a lot of times where it comes down to the line of questioning about what kind of property that was, and is the spread there. And sometimes we're actually able to get the property sold through the probate, even with the holdout. But it takes a certain line of questioning on our end to ask. And it's possible. I've done it 4 times. We had multiple missing people, and one was almost a holdout. So there's ways to do it.
Okay. One quick question. So from Mark. So we are finding these properties and then filing a probate with the court. How, I guess, explain that process a little bit. This is a question from Mark.
I don't know what state they're in. So they may be able to do something a little bit differently.
Okay.
But really, what happens, the investor finds that it's got to go through, title company says it, Ed's calling me going, Al, I found a property in Florida, it's got to go through probate. That's where I'd say, okay, first step, we need the documents, right? Then we do the consult, then we get everything prepared, draft, they sign it, then we're filing it. As lawyers, we're filing it in court. So it may be different in like other states. We've seen some weird stuff, like in Maryland, you can do some crazy stuff, and other states. So it may be like that.
Then Caroline, just want to answer your question. How is there a limit to open an account with directed IRA? No, there's no limit. But what I would say is, if you're interested in investing in real estate, whether it's probate or otherwise, at least set up your self-directed IRA account. It literally takes, 10 minutes online. We'll have it open for you the next day. And you don't need to move like your entire retirement account to us and let it sit here until you find a deal. But what I was always recommend somebody is, if you know you want to invest through your self-directed IRA, get it established and get enough in it where we can cover an earnest money deposit or some sort of deposit to lock that property up, in contract, and get the process started. And as long as we've got, a few weeks to close, you can move the rest of the money over through a transfer from Fidelity or Charles Schwab. That usually takes about 3 to 5 business days to get the money moved over, but at least get the account established, at least get enough money in to cover an earnest money deposit. All right, cool. Ed, any final last words before I really appreciate both of you guys being on. I think this is super helpful to anybody, first learning about probate. Again, this is one of those topics where you're gonna have to like go and search out Al, sorry. Search out Al. He's got a ton of education. He's got a YouTube channel, he's on Instagram. I mean, he's always doing stuff. So this is just kind of the tip of the iceberg. This is not like the end all be all, but go search him out and learn more about probate. And Ed, always great to have you. Any final last words from you?
Yeah, just what I love about Al's approach, and it's really in line with what we do, which is there are very specific mechanisms. So like the partition sale or actions you can take to quiet title and things like that. But what we have found as operators in the space is often engaging individuals and just trying to negotiate win-win solutions are a much better solution than trying to utilize the tools that are available in the court. Those are really tools of last resort, and you're much better to reach a negotiated situation in working in everyone's common interest. So that's the last thing I would say.
Awesome. Al, any final last words?
Final words, jump in. Like a lot of people, want to research constantly and look up everything and want to know everything about it. But if you really want to get into these deals, it's possible. You just got to really jump in, connect with great investors like Ed, and get into the game. Whatever market, again, do your research with markets. There are certain markets that are hot right now and certain markets that may be hot later. And that's going to depend on what you want to do or what you want to get into, but just jump in the game.
Awesome.
Hey,
and I really appreciate.
Can I plug my Instagram real quick? So sorry.
Yeah,
guys, we love you to follow our day-to-day journey on Instagram. That's the best place to see it. You see us in the shenanigans. You see us walking through some really gross houses. Nate, you and I were talking about that before.
Oh, yeah.
And then some less gross houses, but a lot of our projects and stuff. We'd love to have you follow us there.
And if both of you could share your contact information, whether it's just your website or email, whatever you guys feel free, go ahead and type that in and maybe verbally say it too. A lot of people are asking for how to connect with you guys. And while you're doing that, I just want to thank everybody for joining. Remember what these workshops are intended to do. They're just intended to give you guys, more access to people that are in the trenches doing deals, so that you can properly identify investment opportunities for your self-directed retirement account. Because remember, self is the fact that you've got to find your own investments. We'll process it. We'll make sure that it's IRS compliant and that you get all your tax benefits. But as far as finding the investment, that's why we do these workshops. These workshops are intended to bridge the gap between clients that have money waiting and investment opportunities, because we can't sell you the investments, but we can provide you great education. So keep tuning in. If probate's not your thing, so what? You learn something new about probate. You never know if you're going to run into it, but we're going to have, continuous education that'll show you how to find deals in different ways. And we'll probably have these gentlemen back at some point. So if you guys love the content, let me know, shoot me an email. And just great seeing both you guys, and can't wait to do more with you guys. Al, Ed, thank you, gentlemen. Appreciate it. Thanks everybody that attended. We'll see you guys on the next workshop, Rethinking Your Retirement. Have a good rest of your guys' Tuesday.